Yeah, and just to extend the point that Gautam made, and look, India is always expensive. I always say that Indian market is like Malabar Hill property. You'll always get it expensive. You'll never get it cheap, right? So it's just a question of how much more expensive. Look, on the market, I'll tell you one thing. I think 3 or 4 weeks back, I had spoken about 20 DMA halt. Whether that gets confirmed or not. I think that's got brutally confirmed now. Now what I'm watching out for is the 200-day moving average. Because, just like bad news came in at the 20-day moving average, I won't be surprised if good news comes in at 200-day moving average. And that's why I give so much importance to these price levels. Now, what are those levels to watch out for? On the Nifty, we are now just 1.5% away. Actually, maybe slightly more because in the last hour, there was a bit of a bounce, which I may not have captured in my graphics. But let's say 2% away from the 200-day moving average. The Bank Nifty is 3.7% away from the 200-day moving average. But I tell you what, the two leaders of the market, ICICI Bank and State Bank of India, which led the Nifty and the Bank Nifty all through last year, they are already at the 200-day moving average. So if they are there, then I think it's a matter of when and not if Nifty also goes there and tests it, even if it's successful or not. Now, there are some indices which I'm looking at in terms of the 200-day moving average cushion. The mid-cap index, by the way, is already at 200-day moving average. We discussed Bank Nifty is about 3.7% of 200-day moving average. Nifty IT is still about 2% above 200-day moving average. Then the three indices that I'm keeping an eye on, which have had a big rally, and I think that's something that you got to keep an eye on. Nifty Metals, by the way, China opens up on Monday, and that could be a big trade. 7.5% of its 200-day moving average. FMCG and auto, they're still about 4.5 to 5% above the 200-day moving average. But if you look at the stocks, and that is where the problem is, the big stocks of the market are at or below the 200-day moving average. ICICI Bank is at 200-day moving average. SBI is at 200-day moving average. Infosys is at 200-day moving average. TCS is just 0.5% higher than 200-day moving average. And one thing which we haven't spoken about or haven't given enough importance is very quietly Reliance has broken down. Actually that's one thing which has really impacted the market sentiment. Reliance is 9% below its 200-day moving average. So going forward, I'm keeping an eye on three stocks: Reliance, ICICI Bank and SBI, because they need to bounce. They were the stocks which led the market rally last year, and all these three stocks have now fallen 15 to 20%. Their combined weight on the index is more than 25%. And with the kind of fall that they have seen, that's really impacting the market. So I'll keep an eye on this, and of course the 200-day moving average. But the big talking point was the Adani Group stocks, where there was quite a bit of selling pressure for 2 days in a row. And Nimesh is going to tell us what exactly happened over there. Nimesh?
Hi, Anuj. There was massive sell-off in the Adani Group stocks. I'm not saying that there was panic selling, not only in the market, but in the overall Adani Group stocks as well. But while we all are talking about panic selling and all, the fact is that